Ladies and gentlemen, we will begin our live evening coverage of the budget analysis this evening at 7 o'clock. And at a time when the global economy is navigating turbulence, from geopolitical flashpoints to slowing growth and tightening capital, this union budget arrived with a clear message: stability over spectacle, strategy over short-termism. This is a budget that looks beyond the immediate horizon. A budget that places big bets on data, defense, manufacturing, and nuclear energy, not just as sectors, but as pillars of India's self-reliance. So is the stable budget the one that India needs right now? I believe that this time, while there were no major announcements on taxation or any fiscal surprises, we may not have had a headline-grabbing budget in that sense, but the underlying message is about continuity, stability, and a deliberate push towards Viksit Bharat. In fact, a few of the schemes, few of the policy decisions were aimed at looking forward right up to 2047. So I call this a long-term budget, not just a long-term view that the budget has, but a long-term budget, a budget about committing to India's growth beyond the next fiscal. Here are details on why it is so.
The Union Budget for financial year 2026-2027 charts India's course toward a tech-driven, secure and self-reliant future.
It's a policy direction thing rather than what we are going to do thing. And that itself is the headline you should draw. The government has downplayed the budget this year. It's a stability budget. The government is saying we are a stable country. And we have our inflation control, we have price stability, we increase our capital expenditure, fiscal consolidation is fantastic, the drivers of domestic growth are there, we are doing what we can, and the government is looking and the private sector can step in.
A blueprint firmly aligned with India's long-term vision of Atmanirbharta by 2047.
Our government, led by Honorable Prime Minister Modi, has decisively and consistently chosen action over ambivalence, reform over rhetoric, and people over populism. We have pursued far-reaching structural reforms, fiscal prudence and monetary stability, whilst maintaining a strong thrust on public investment, keeping Atmanirbharta as a lodestar. As a growing economy with expanding trade and capital needs, India must also remain deeply integrated with global markets, exporting more and attracting stable long-term investment.
A major boost for data and cloud infrastructure, FDI in data centers gets extended tax holidays till 2047, positioning India as a global digital backbone. From digital dominance to manufacturing muscle, the government is placing bold economic bets amid a volatile global landscape.
First, let me say that these are very complex times we are living in. There's heavy geopolitical fragmentation. There's a breakdown in global supply chains. Global polity is impacted, and it's very important that India at this point is fiscally responsible. It's fiscally prudent, and I would really say that Finance Minister has been very disciplined in bringing the fiscal deficit down to 4.3%, bringing the GDP, the debt-to-GDP ratio down to 55.6%, and yet increasing the Capex spend to 12.2 lakh crores, which in effect really means that your Capex spend, effective Capex spend, goes up to almost 4.4% of your GDP, which is enormous. It has never happened before in the history.
The first budget since Operation Sindoor, the allocations indicate careful short-term planning focused on phased growth over rushed procurements. A decisive leap towards India's defense modernization goal, keeping our long-term national security in mind.
We look at the defense budget, it's almost 18 to 20% increase in the defense expenditure. We have one new element now in the defense expenditure, which is called emergency procurement. It was there last year, but it has become much larger now. And hopefully it will continue into something called a fast-track procurement process, because they want to reduce the procurement time cycle for defense procurement. And that's the reason why you see this whole increase that you're seeing in defense expenditure. Even the capital expenditure has been increased by almost 25% by 2.35 lakh crores. And, I think whoever is in the defense industry is very thrilled with this, that whole continued push, which was, and no unnecessary surprises that came in the budget. So we are very grateful to Madam Finance Minister, who has delivered the continuity and delivered growth in this area.
Encompassing nuclear, data and defence, the NDD budget extends customs duty exemptions on nuclear power imports till 2035, strengthening India's clean energy ambitions.
If I look at the broader customs, it is about making manufacturing more competitive, making exports more competitive, focusing a lot on simplification, and those areas which are of strategic importance to India. How do you ensure that you get power and others and build the new power plants on a more competitive basis so it encourages manufacturing overall?
The railways also gain momentum, with a 10.2% rise in allocation laying the tracks for India's expanding future with 7 high-speed rail routes. The blueprint for a stable budget that looks at the long term in an uncertain global environment.
A member of the Prime Minister's Economic Advisory Council, Sanjeev Sanyal, joins me now. Sanjeev, hi, good evening, and thank you for coming this evening.
Good evening.
Good evening. Sanjeev, this budget, some people have said there is no singular headline in the budget. No one big announcement. Not one big fiscal surprise or a taxation surprise. It wasn't a major event in that sense, is the critique. I would like you to respond to that first.
Well, ultimately the budget is a fiscal document. We have had a huge slew of reforms recently, the labor reforms, the European Union, India, FTA. So there have been a whole bunch of announcements on the economic front. The fiscal document should obviously, given that growth is running at over 7%, inflation is not an issue. If we are not going to right now invest into macroeconomic stability, where will we? So if you look at the fiscal consolidation that's carried out, we are now seeing the fiscal deficit down to 4.3%. The debt-to-GDP ratio is now running a little above 55%, significantly down from the spike during COVID. So all of this is happening during a time when the rest of the world is facing serious problems maintaining macroeconomic stability and debt dynamics. So I think the main signal that is being sent is that, look, we have decent growth and very controlled inflation right now. We are investing in the foundations of macro stability. And by the way, it's not just the fiscal. Just 2 days ago, the economics survey also came out and showed that the net NPA levels of the banking system is down at 0.5%, the lowest in a long time. So macro stability is the first signal being sent, and therefore you've also seen no populist reveries for state elections either.
No populist reveries for state elections?
State elections.
But doesn't that happen at a state level nowadays? Because every political party is competing at a state level. And that's not stopping even in Bengal or Assam or anywhere else.
Maybe. Maybe the case, but the central government, as you can see, has clearly signaled macro stability as being an important anchor for the next 25 years of growth. You very often don't give enough credit to macro stability, except when things go wrong and inflation goes spiraling out or something like that. But to have sustained the world's highest GDP growth rates with inflation being essentially non-existent, in fact, some may argue even that it's too low, is a very creditable performance.
Sanjeev, the government announced a tax holiday for any foreign company that provides cloud services to global customers and to Indian customers through Indian reseller entities. Essentially, the idea seems to be at data sovereignty, but what was interesting was that this was all the way to 2047, which means there's a long-term view, that we need to take a long-term view. This is the government's position. This is not today's government's position. This is the position of the government of India. Could this, first of all, I want you to explain that to some of our panelists, everyone who's here. Subhranshu, right? We'd love to hear. Sushil Kedia is with us. Lokesh is with us. Am I asking the right question on this? Absolutely. You want to add something on that? Subhranshu wants to add something on that. Yes, Subhranshu, yeah.
Sanyal is absolutely right. I think this is a method budget. It's played in the test cricket style, not T20. I think there's an eye on the second horizon as well. There was nothing knee-jerk. There was nothing reflexive. There's no panic. Modi 3.0 seems to be very poised, very comfortable in its skin. I think the purpose of the budget is not to tickle the market on any given day. So I think this is reflecting for the long term. And, I take that. But my point was to you, particularly, Sanjeev, that why take this tax holiday all the way up to 2047?
Well, this is a strategic call. So let me explain. You see, we have this huge digital industry. We all love our software and IT industry. But let us be very clear. We are vulnerable in very fundamental ways. Much of all of this AI and all these kinds of things that we are doing are not happening out of servers that are based in India, which is almost like keeping your foreign exchange reserves in somebody else's vaults. If they want to switch it off, they'll switch it off. So, you can invest all you want in defense. If in a digital world, switching your digital system off is good enough. Now, of course, we will invest in it ourselves, but having some of this based physically in India is, I think, a geostrategic investment. It's not merely an economic thing. It's a geostrategic investment thing. So I think we do need to give investors, including foreign investors, enough visibility to be willing to put serious money on the ground on this.
Yes. PK, does this mean you think that Microsoft, Google, Amazon will all start using more Indian data centers?
Yes. The idea is that they will be induced to do things like that. It may not be necessarily Microsoft, it may be new players. But the size of the investment that they put into India could pay off massively because we have an enormous cost advantage. And therefore, it makes sense for both the existing and emerging players to take advantage of this enormous opportunity, 21-year tax holiday, to really place massive amounts of investment into India, where the skill sets are available to fully exploit the opportunity.
Yes, please. Yes, please.
Those investments are already flowing in much before the budget.
Yeah.
Google's made a big announcement for a data center in Andhra Pradesh.
Yeah.
Amazon is already very big in terms of localizing cloud-based data centers in India. But the more important point is, let's not forget that India is also already amongst the largest, if not the largest, base of individual subscribers for large language models like ChatGPT.
Those wall graphics later. Thank you so much. Yeah, please. Yeah.
ChatGPT, for example, has Indians are the #1 subscriber population on the planet.
Yeah.
And as the economy grows with 1.3 billion people, it makes eminent sense for the large players to have data capacities in India as well.
Yeah, absolutely. Thank you, Aditi. Thank you, Aditi. Not too many instructions, please, while I'm anchoring. Tell me, Sanjeev, I'm trying to get a headline out of this budget. I'm finding it difficult. And that should not be the case. You know, you agree with me, PK? Yeah, so we say, yes, there's a long-term view. We were told that Part B will be extremely sort of, noticed by the global community as giving a long-term vision. Second point I take with a long-term view is the bolstering on defense. I'm trying to build a theme here that there's a long-term view, but is there? Possibly on defense, there's an 18% increase. Then there is on nuclear, there is a transition, there's a view to harness nuclear power, so there's exemption on custom duty on import of goods required for nuclear power projects till 2035. But after that, I'm drawing a blank. After that, Sanjeev, I'm drawing a blank. I'm not quite sure.
Macro stability.
Where if I'm missing something. Pardon me? Macro stability.
See, now, this fiscal year, we've had two things already.
I don't know why.
We've already had a substantial reduction in the GST in the course of the fiscal year. Halfway through the fiscal year, there was the GST reforms were put into place. And what is interesting is that despite the reduction in GST rates, we are continuing to see GST revenue stay strong. It has grown about 7.5% year on year in calendar year 2025. And there's a lot of focus that people have on the weakness of EPS growth. But what is interesting is that if you look at corporate tax revenue growth, in the last 12 months, we now have data for December, which came out the day after the economic survey. So that shows a very strong pickup in corporate tax revenue. And as a result, in the first 9 months of the fiscal year, the fiscal deficit was only 54.5% of the full year target. Of course, that was helped by non-tax revenue. But on the tax revenue side, corporate tax revenue is picking up strongly. And income tax revenue, despite the cuts in last year's budget, rates were cut across the board, continues to grow around 6.5%. So we have a very robust economic picture. Macroeconomically, we are likely to grow 8.5%. I think the government is being highly conservative with a 7.4% forecast for this year.
No, but I just one point. Just one point. One point. Let me push. Let me 1 minute. Sanjeev says that the big headline is macroeconomic stability.
Current account.
No, 1 minute. Just PK. Hold on. PK.
Why should you underestimate
strategic investments?
PK, 1 minute. Is that? See, no. So, I'm not saying why. It was mentioned earlier today as part of our analysis that there have been many countries that hit a 4 trillion mark, but didn't grow as aggressively as China did after hitting a similar figure. And this is a reality, that many countries hit a 3-4 trillion mark, but didn't grow beyond that. China is actually one of the exceptions. And I was just wondering whether it would be too cynical a view to say that while we emphasize stability, we need to go a little bit beyond macroeconomic stability to look at clarity in terms of where is the big announcement / push / vision on manufacturing, for example. Yeah, am I right here? Am I asking for the moon and the stars?
I'm sorry.
And everything combined here?
Arnab, no, Arnab. No, Arnab, you have to understand that a budget is a fiscal document. Its emphasis must be on macroeconomic stability. In a country we are seeing GDP growth growing well over 7%. Inflation is not under pressure. Emphasizing fiscal consolidation is not a trivial thing. And as I mentioned earlier, we have also had dramatic improvements in the health of our financial system. Why are you underestimating this?
No, I'm not
fiscal exercise is not for creating
headlines
for the media. It has got to do with
Sanjeev, I'm not underestimating anything. I'm just asking you whether beyond macroeconomic stability there is a big story that we need to look at.
The big story is that India is the fastest growing economy in the world. And, we are achieving this growth without stressing the macros. This is not a trivial issue. And as PK just pointed out to you, and you yourself also mentioned, one of the things of history is that you do see countries go through phases of growth. Like, for example, the Southeast Asian countries went through, in the 90s, a phase of growth. But then they did it with macroeconomic, making massive macroeconomic sacrifices on their financial system.
Yeah.
The result was that after 5-6 years of high growth, it all fell apart. What we are doing is bolstering the foundations so that we can keep doing this 7%. And remember, we are doing it under a situation where the world is in extreme disarray. Now, supposing the world does fall into place and this global trade situation improves, we will be easily able to sustain 8% plus growth rates. But to do that, your economy has to be around in a good shape to take advantage of the high growth phases, which is what China did in the 2000s. It's not like China grew fast throughout the entire phase. It's basically between 2001 and 2007, it grew at double-digit rates. But for that, it had to hang around past the Asian crisis and be able to do that. What we are doing, consequently,
Abhishek,
are creating the foundations for that. And meanwhile, we are still growing at very, very fast rates. It's not like we are growing at slow rates. 7.4% is not to be sniffed at.
No, nobody's sniffing at it. I'm just asking you that you said that its budget is a fiscal document, and hence, essentially, it is the fiscal numbers. It is not meant to be a larger policy statement than that, and that, I believe, is part of an overall trend over the last few years, not to expect too much out of the budget, right, Abhishek?
Yes, most of the reforms happen outside of budget.
Outside of the
Tax
budget.
Act outside of the budget, and many others.
Yes, absolutely. Lokesh.
Surprising is
Arnab, may I also point out?
Just 1 minute, PK.
What's surprising is a 20-year roadmap in an annual budget. I mean, if you talk about the semiconductor policy, rather than government coming out with a concrete idea of setting up a semiconductor unit or a semiconductor park, but then a long-term policy up till 2047 is something.
Semiconductor units, big ones.
No, that is
from Assam to Gujarat to Tamil Nadu to Punjab. So it's
I just let me just complete.
It's not that things are not happening.
No, the point is India is yet to have an ecosystem, foundries, and having back and front end linkages, and then having a connect with the VLSI designing system and developing the sales distribution. It's a long way to go ahead. So I find that Capex expenditure has stated a multiplier effect for the economy in a short term time period. But such a huge long term project, such as semiconductor, which requires probably a gestation period of 5 to 10 years, and trying to embark upon a policy in an annual budget that is supposed to take over the manufacturing is something which doesn't align with the overall sentiment and what Mr. Sanyal is saying. It's a fiscal statement. It's a fiscal sheet altogether. What I'm saying is that the budget should have spoken more on the fiscal front.
I would like to, see, we can keep complaining and you guys can keep debating this. But going back to Sanjeev. Sanjeev, not much was said on the tariffs issue. Obviously,
yes,
the geopolitical uncertainties, you cannot expect there to be a political statement on what Donald Trump is doing. But a lot is done to boost domestic manufacturing, especially, vis-a-vis pharma, rare earth, semiconductors. So is there a subtle message to the West, or rather to America, or to the West, America/West, which is embedded somewhere in the budget, which you can perhaps elaborate a little bit more on?
So our approach to the US tariff issue has been the same. We will not back down, but at the same time, we will not escalate the matter. So we continue to negotiate with
two windows. Thank you.
In fact, we have
please continue.
We have very substantially agreed to between us what such a budget would, such an agreement would be like. But as I said, we will not back down on core issues, and we will continue to push through where we can. And so we have with the European Union, with the UK, with Australia, with UAE. We are very close to with something with Chile, and so on and so forth. So we will push along. And I think, as the Honorable Commerce Minister had said, we were not going to sign on to anything with a gun to our head. And why should we? Our growth is in good shape, and we seem to be making progress anyway. So we can wait if necessary. But yes, if a mutually conducive situation can be arrived where we can sign up to a trade deal with the US, we will be very pleased to do so. But we will not back down on our core demands. That has been the case. Meanwhile, we will chug along and push through, as I said, long-term things like what we have seen in the budget on whether it's biotechnology or nuclear or cloud facilities and so on.
Right. We have Nilesh Shah, Managing Director of Kotak Mutual Fund, also joining us. Nilesh, markets say this is a quiet budget, no tax shocks, no big giveaways. Is that precisely the point? Stability over spectacle?
Undoubtedly. Though from a market point of view, STT hike was unexpected, and which is why market has fallen. But I'm sure market will appreciate that this is the first budget where capital expenditure is more than the net market borrowing program. We have narrowed the gap, but moved in favor of capital expenditure first time. This budget is on fiscal prudence also. And as Sanjeev mentioned, it is investing for the future, from biosimilar to container manufacturing to data center to contract manufacturing. So net, a prudent budget.
Has India, therefore, Nilesh, entered a phase where budgets are no longer about yearly announcements, but more about laying the long-term vision, you know, the 5, 10, 20-year economic rails?
Undoubtedly, the budget have to give annual financial statement, but beyond that, it must be spending over a period of time. For example, we announced RDI fund to invest about 1 lakh crore in futuristic industry and the research and development. We can't allocate 1 lakh crore in one budget. So the prudent was spread over 5 years and provide 20,000 crore a year. Similarly, in this budget also, there are many investment proposals which will spread over number of years, like 7 high-speed railway corridors. So budget should do one annual financial statement and guardrail for future exceeding maybe about 5 to 7 years.
On the point which was raised here earlier by Sanjeev, I'm curious to just take a view from my panel here, and then I'm coming to both of you. Kishore, you have a specific... I had a question here, actually.
Yeah.
We have said today that we'll give a tax holiday on cloud services all the way till 2047. This is an unusually long commitment.
Yes. Yeah.
There is some message the government is sending here. I think it is testing the waters. It is saying that to Amazon, Google and all these, that if you want to run the world's cloud and AI workloads, then you base your infrastructure here. At a time when Trump is saying, bring your infrastructure and your jobs here, India is saying, bring your infrastructure here. And if you do so, we are committing to you a tax holiday till 2047. I'm surprised nobody picked up that bait when I said, what is the message to the West? This is the biggest message we could have sent. Am I right? Biggest message we could have sent to the...
There are two messages here. One is that, yes, we are interested in our data protection and ensuring that Atmanirbhar Bharat is also achieved through this, and the counter policy measure of what is happening with H-1B visa in America and the tantrums, as I call it. The second point is that there is a very subtle political messaging. I don't know whether people have picked up. I think so. That till 2047, we are here as a party. So 25 saal ka
no, I don't think that's the point. I don't think the point is this. I'm sure this will get some attention globally. Won't it, Subhranshu? Lokesh, that India is saying we'll give you a tax holiday if you base your deep tech / cloud infrastructure in India.
Yes.
If you shift your focus, don't do what Trump is telling you to do. Do it what is in your interest, because we are the growing economy of the world. The market is here.
Yes.
The early bird, wins out here. Lokesh, Subhranshu?
Very much in line with the Data Protection Act that will be executed next year, 2027. And India has given a clear message to the West that we will not be depending upon you for our tech, as a tech destination rather than, in fact, it's the right tune. We will be able to capitalize upon the brain drain reverse that is happening.
Yes.
We shall be creating a lot of opportunities. In fact, a lot of people coming back can invest in India.
One at a time, 1 minute. Subhranshu.
Underestimate the power of cloud capital. This is something that only America and China possess at this point in time.
Yeah.
Europe, for all intents and purposes, is a client. India is saying now, come here, strike route. We want our share of cloud capital. That's a very important message.
I want to take on that from the director of IIT Madras, recently awarded the Padma Shri just a few days back, Professor Kamakoti. And he has done some absolutely brilliant work on data sovereignty. He's working closely with every issue of national interest. He's a member of the National Security Advisory Board as well. Now, Professor Kamakoti, thank you very much for joining us. This issue is something we are trying to decipher here. We have a great panel. We have got Sanjeev Sanyal, who's a member of the Prime Minister's Economic Advisory Council. We have Nilesh Shah, great voice from Mumbai, MD of Kotak Mutual Fund. We are saying here that we will give a tax holiday on cloud services till 2047. What is the message we are sending to the global tech players?
Right. See, the major issue today we are facing, which can actually be a security issue, which can also be a bigger issue from a privacy point of view, is that our data must reside within our own country, within our own shores. And that requires multiple things. It means that we need to have our cloud services installed within our shores. That means we need to provide them a lot of energy and other cooling and other related issues. There will be some amount of energy investment and water type of investments there. But then the other important side of it is that our data will remain within our shores. And we are coming out with PDPR and other rules and regulations. And with the advent of AI, these rules are going to keep changing. It's going to be dynamic. And it will take at least, in our opinion, many of us agree that it will take at least a decade by which we understand the rules of the game of AI and what we can share and what we can't share. Now, given all these things, it is very important that we maintain the clouds within our country, and everything may not be possible by just Indian vendors, but we may also attract foreign vendors to come and put their cloud services here, but with a tight security thing that they don't take the data out of our country. And for that, we need to give some subsidy, and I think that is the reason why we are giving some subsidy for cloud services. So this is my understanding of this whole thing. Arnab. Thank you.
You know, one. We have a lot of questions.
One question.
Just 1 minute. Just 1 minute here. I'll let Sushil come in. I'm getting in everyone there. We're trying to get a reading of this decision because I think that the big tech giants have large pendency of litigation across Europe now in terms of data breaches. So is the Modi government putting up guardrails to its booming digital infrastructure sector? Is the Prime Minister saying here, Professor Kamakoti, that, see, India is going to be not just the leading consumer, but the biggest market for digital services globally by 2047? I am setting a condition today that if you work out of India, I'll change the rules for you. Is he trying to break the so-called unity between the tech players and, in a way, interestingly throwing a bigger challenge back to America?
So I must say that, this particular announcement is basically to protect the interest of all the data generators of our country, which is our public, right? So today, many of these large language models and all the other things, they think that they are actually serving our country, but actually, I did read some newspaper statement where some person asked, why are you giving ChatGPT free to India? Some statement like that. But it is not the case that we are the largest producer of data, and as you rightly mentioned, Arnab, we are going to have large-scale digital installations in the country. I can give you examples even before AI has come up. IRCTC is one of the world's largest, transaction system, largest distributed database, which we are all proud of today. Millions of people, book tickets. The transaction is mind-boggling. State Bank of India, these two are, and the National Stock Exchange. If you take these three, this itself shows the scale at which we operate. And so we are going to be the biggest data generators. And what this particular announcement essentially says very clearly, that you come and do something that is beneficial for my country, and then you can basically get certain.
So I'm going back to a headline. I know I'm coming. I'm going back to the headline because this is a very interesting conversation, and I'm deliberately going to Professor Kamakoti, gone to Nilesh, made Sanjeev think what direction I'm taking this discussion in, made you all wait because I'm getting a headline. See, I'm a reporter. I'll not end the show without a headline. My headline I would put would be, tell me, would it be fair to say, Subhranshu, this budget has sacrificed a short-term applause? As my friend Sanjeev, when I provoked him a bit, said, we are not doing things for the media. He's right. It does not want a short-term applause because we are building long-term state capacity.
Absolutely.
Digital capacity, long-term state capacity we are building. We don't want short-term applause. We are thinking in decades and not election cycles.
That's right. Like
Subhranshu.
China says it's running a 100-year marathon.
Yeah.
I think we have pivoted this to 2047 for right reasons. That is when India, as an independent country, gets to be 100. Also, don't forget the demographic dividend. 400 million Indians, Arnab, are not yet 20 years of age. And this is a saturation coverage of smartphones. This is a country of digital natives. And so data sovereignty, data localization.
Data is power, data is armor.
That's right.
And this budget is telling the foreign companies that if you want to operate in India, work out of India. Set up shop in India. And let's see whether you do that. If you don't, we'll put our own guardrails. We've got people like Professor Kamakoti who will provide a parallel system. You see, the thing is, you got people working in it. Today we did a great play with Sarvam AI, by the way, Professor Kamakoti. The whole speech was translated into Kannada and Hindi. We had a little hiccups, but it was beautiful. So
Don't talk. Google, Meta, Amazon, TikTok have $700 billion out of the $1 trillion of advertising budgets that the world has seen last year.
Yeah.
So the surge in American equities has been led largely by the 7 top tech players. Them having a vested interest in India and being localized here is of great national importance to India as well.
Yeah. So let me now go back. I'll go back to Sanjeev out here. Critical sectors for the country, Sanjeev. Defense, 20% increase. Biopharma Shakti goes beyond generics into biologics and biosimilars. This is moving India up the pharma value chain rather than just exporting volume. Nuclear. On nuclear, we have given a tax holiday. Some kind, not a tax holiday. I think we've given on nuclear also, we have given customs duty exemption on import of goods required for nuclear power projects. So we are seeing a strategic...
2035.
Right? Up to 2035, right? Sanjeev? Up to 2035. So that's another interesting thinking. And now we have worked on this data center. So on all 4 are things that we'll reap benefits for 10 years from now, Sanjeev. It's not necessarily that we'll see the benefits of this in 2026, but maybe 2035, 2036 is the likely, date we are looking at.
And we have to begin to create these foundations. That's why we need to begin to do them today, because there's no point in having this huge IT sector when the entire basis of it is the cloud and you don't control it at all and someone can switch it off. The same thing is true for energy. You can, in the end, we are not a hydrocarbons-based system. We can create some solar, but solar is, or any other kind of renewable has a problem that, it's unreliable. So you need a backup. What is that backup? Nuclear. So all of this is being done with that in mind. There is no reason, given that there is no current economic pressure other than what you're seeing in the ups and downs externally, why we should not invest into these long-term things. If we are not going to do it now, when will we go out there and invest and think long-term?
Yeah, so then I see the hands go up there again. Professor Kamakoti's hand goes up.
Yes, I want to ask one question. What is the policy for GPUs? We don't even have hard disks manufactured in India. What about optical fibers? What about switch gears?
Let Professor Kamakoti answer
that. Right now,
that.
what is happening is, if we are...
I understand. He got the question. He'll get. Let him answer that. Yeah.
Yeah. So just to add to what Sanjeev said, see, there are two very interesting announcements today, Arnab. As I mentioned, energy is going to be extremely important to run the complete data center and cloud. I'll come to the GPU part. See, today, nuclear, whatever subsidy has been given for nuclear, it is keeping in mind we have to look at small modular reactors, and I think that's going to be a very big investment, and that is how we can basically power these centers. And very interestingly, if you note, I don't want it to slip out that we have really brought in carbon capture, utilization and storage. And there is a very interesting, 20,000 crores, if I am right, if I just saw the speech, investment on that. And that is extremely important because as a country, we have also given certain commitments under the Sustainable Development Goals on how we become net zero. So to run these data centers in a net zero form itself is a very good challenge and very big challenge. And I think their academia, industry and government will put that thought process together. So that is one point that I want to add. Now, coming to the GPUs, yes, we are not making GPUs, we are not making hard disks, so what? Now, what next? See, there are, when you look at computing, Arnab, there is a software layer, there is a hardware layer. And always it has been a very good combination. What hardware could not achieve, software was able to achieve, and what software could not achieve, hardware accelerated. And that is how the entire game of computer architecture has evolved over last several decades. Now, what we are doing, we are having a couple of startups. Someday, if you have a show where you can project some of our startups like Servam, etc., it will be great. Where we are looking at a non-GPU, simple CPU-based inferencing mechanism. So there is, when you look at AI, there are two parts. One is to train the model. Another is to basically inference or ask queries to that model. So this inferencing can happen on a non-GPU environment, and we have stunning results which we will be bringing out. We have been working on those things. So that will also be a part of the data center deployment. And on the GPU side, there are other competing hardware that are coming up. For example, we don't want a GPU to be a sarvagya, like it understands everything in the world. There are something called domain-specific GPU LLMs, large language models, which can basically be trained on a very limited infrastructure.
Right.
And so we are looking at these type of solutions, and necessity is the mother of invention, and we will come out with those.
If there is such thinking, then Nilesh Shah, I go back to this, between the long-term macroeconomic thinking, the great attempt to build a data sovereignty. How do you decipher the immediate reaction of the markets today? If you see the market graphics, I can pull them up. Is there a fundamental weakness that was waiting to surface which emerged in the budget that caused that crash? What is in it for the FIIs? Was that the problem? Was it about the 0.05 or whatever percent STT on futures? Why did the PSU bank stocks crash? Are they not looking at the long-term view, Mr. Shah?
So today, the reaction of the market was driven by unexpected increase in STT. There were many speculators who realized that the cost of trading is increasing, and hence they started selling.
Yes.
There is also rumor that yesterday there was crash in precious metals, and today some of the commodity positions required margin, and brokers squared their position in equity market to pay for the margin on the commodity side. Be the case as it may be, market has reacted in the short term. But Arnab, please remember, we are still 6% below all-time high level on Nifty 50. There are very few markets in the world which are trading at that kind of all-time high level. Second, Chinese markets have done very well in last 2 years, but they are still trading where they were 17 years before. So we have done very well over last 17 years. This is the phase of consolidation. And most importantly for market, 2 quarterly earnings have been impacted by one-off things. One, labor cost expenses, which came suddenly, and the rupee depreciation hit as many of the companies were unhedged. There is an earning adjustment going on in the market. And on top of it, this STT hike came, which probably reflected in today's market movement.
So,
I have a question for both.
Just a point to Sanjeev. Sanjeev, are we setting up, we can be on that window, are we setting up a structural wireframe for a long-term superpower status? You know, I get a feeling that there's some very long-term thinking that's gone on, and maybe the media has missed the messaging so far, which is why I'm trying quite hard here. Sanjeev, and then I'll come to you. Sanjeev.
So I think that is exactly what is being done. But I think you should see the wider context and not just the budget. If you see the free trade agreement we have done with the European Union, it was an agreement between equals, something we would not have imagined doing just a few years ago. We have similarly done labor reforms. Just a few weeks ago, we announced, again, without any real social unrest. You know, imagine 10, 15 years ago, these kinds of reforms had been done. You would have had major agitation on the streets. But it went through, almost nobody noticed these. The amount of money raised, by the way, in Indian capital markets, since you're discussing capital markets, is today higher than has been raised in London. I mean, I and Nilesh started working in the mid-90s. At that time, you know, the Mumbai's capital markets were smaller than that of Bangkok. And today, the amounts of money that are raised in Mumbai's capital markets are simply at a different scale altogether. So I think we are now begin to thinking of ourselves as the world's third largest economy and as a world power that can deal with others. And as I said, even with the case of the US, while we have not escalated anything vis-a-vis President Trump's demands, we have also not bent at all. In fact, other than China, we have been the only country that has basically been steadfast in what we believe and what we think is the correct thing for our country.
Yes, absolutely. Sushil.
There is an ongoing, feeling about the way Modi administration works is, दूर के फायदे के लिए पास का घाटा उठाना पड़ता है. And even in this STT thing, which boggled my head कि government ने क्या किया, when sense starts sinking in, the mathematics is very simple here. The puzzle is solved. 15 times more expensive it will be for anybody to do options trading. As far as STT goes, 90% traders in the markets have been losing money. That's what the SEBI report was. So what happens is this uneven playing field between algorithms that cut people so fast. Now, 15 round trips that an algorithm used to take, it will pay so much in one round trip. So even this STT increment is not about hurting the common man, it's about de-hurting the common man.
Yeah,
so, it takes
everything
time
I'm seeing now, I'm seeing everything the Modi government is doing is actually in a pattern.
Yes.
We are not connecting the dots. So, for example, nuclear power. Nuclear power, last few months, if you see the number of headlines, government's ambition, we will scale nuclear power capacity to 100 gigawatts by 2047. Then you are doing the reverse engineering for that. Then you are pushed for the Shanti Act to remove all the legal and regulatory barriers to private consumption in the sector. Then you have given the exemption of customs duty on imports of goods required under nuclear power projects for 2035. So I think somewhere government is working with two dates in mind, 2035 and 2047. Am I right, Professor Kamakuti? Internal thinking?
Yes, exactly. So, for example,
10 year.
Lot of milestones for the national education policy is 2035. Right? So GER improvement to 50% is 2035. So bringing in multiple disciplines. We have 2035 also as a deadline. From an education sector, I am very clear. And a lot of these schemes especially the way this nuclear has developed. It's amazing because I think over a period of time when India is ready, our Indian producers, our industry is ready to give this small modular nuclear reactors, which are very important for these data centers. And I think at that point of time, everything that is needed would be in place. And that is a very cautious but very carefully planned step. I think that's also my view.
I think it requires us to look at it more like a relay race. And if you see the way in which, for instance, earlier we were discussing about manufacturing, not much has been done. I don't believe that's the case. India has never had a very strong manufacturing setup, and hence it's never become an
can we conclude at the end of this wonderful conversation that actually the government has actually thought things through which are not making tomorrow's headlines?
I have one question.
No, I think but today, headlines are not being picked up. 600 legacy industrial estates, rail corridors, all of these are going to support.
Take 5 seconds.
Yeah, fine. One question with Sanjeev ji is that, do you think the disinvestment target, about 80,000 crores, seems to be very mildly...
Okay. Let him give a quick answer to that because I have to close this up. Yeah, Sanjeev.
Yeah, okay. The quick answer is this. That we remain committed to privatization and disinvestment.
Yes.
But what we have noticed in the past is that we came up with large targets and then we didn't miss it. We'd rather, depending on how the markets are behaving, do it as we go along, because we are under no fiscal pressure to do it. So no point in giving large targets and then being claimed you didn't hit it. Much rather we do it as it goes, and we get.
This has been a very unusual panel between a scientist, a macroeconomist, right, and a person from the financial industry. But we have connected the dots. If you watch this, there's a lot of meaning we found. Sanjeev, Nilesh, Professor Kamakoti, thank you. And ladies and gentlemen, I hope you enjoyed this conversation on the long-term view. At 8 o'clock, again, I am back. We are continuing to decipher the budget. At 8 o'clock, the 6 Ds of the budget when I'm back.